still missing out on the big market movement? What if there's a way for you to protect your gains without having to watch the market all day long? Sounds amazing, right? Today, I'm going to dive into how to make this possible with buy stop and sell stop orders. These tools are able to help you capture big price jumps and also protect your investments from unexpected drops. So let's dive in. First up, we have the buy stop order. You want to buy when the price starts to rising and hits a certain point above the current market price. This order is like setting up a trap for a stock that's ready to break out. Here's how it works. You set up a buy stop order above the current market price. For instance, if a stock is trading at $50, but you think that it will go up once it hits the $55, and you place a buy stop level at $55, when the stock reaches $55, your order becomes a market order, and you buy at the next available price, making sure that you don't miss the jump. Okay, let's take a look at Tesla, for example. Let's say the current price is trading at $200.08, and your research or predictions has come to a conclusion that once the price hits a certain level, for example, at the level of $210.15, the stock price will likely rise very, very quickly. So you want to enter at this price point, which is 210.15. Assuming that your prediction is correct and you manage to place a buy stop order at this price point, you could have potentially gained, let's say, up to this certain point, a total profit of $67.24. That is a total return of 32%. I would say that is a very high returns for a short trade like this. And of course, that is provided that you have set up your buy stop order correctly. And one thing for you to note is that if, let's say, the stock price did not hit the $210.15 level, your order will not be executed. So in this case, you are further protecting your portfolio, and at the same time, if let's say your prediction is correct, you will be able to reap this amount of profits. So that's for a buy stop order. Now let's talk about the sell stop order, which acts as a safety net for your investments. You want to sell if the price drops and hits a certain level below the current market price. This order helps to protect your profits by selling a stock once it drops to a certain price level below the current market price. So for example, if you own a stock that's trading at $70 and you're worried about a potential drop, you can place a sell stop order at $65. If the stock price falls to a $65 level, your order becomes a market order and you can sell at the next available price, minimizing your losses. So let's take a look at the same example as earlier on using Tesla. Assuming that you have entered the price using your buy stop order earlier on at the price of $210.15 and you continue to hold these stocks all the way until this very day, you would have possibly earned a total profit of about 42%, that is about $89. However, at this point of time, you are worried that there's a potential drop, which actually it did, and you decided to actually put a sell stop order. That is where you set a sell stop order at the level of $262.90. So you have essentially, by placing this sell stop order, you are telling the market that when the stock price reaches this level or drops even further than this level, you will sell off your Tesla share. So if you would have set this sell stop order, you would have gained a profit of about $53.15. That is a total of 25%. It's still a gain from this trade as well. However, if let's say you imagine you didn't set this sell stop order and you failed to keep track of the market movement, you would have continued to have losing trades all the way until here. So if I were to draw the lines all the way here, you are probably making a profit of maybe just 1.24%. So this is the power of using the sell stop order to protect your capital. This strategy lets you secure your profits without the need to constantly monitor the market. So in conclusion, a buy stop is when you want to buy if the price starts rising and hits a certain level above the current one. For example, when the stock is at $50 and you buy it if it hits $55. Whereas a sell stop order is when you want to sell if the price drops and hits a certain point below the current level. For example, if the stock is trading at $50, you want to sell if it drops to $45. So you might be wondering, why are buy stop and sell stop orders so essential for traders? These two orders allow you to automate your trading strategy, capturing the upward movements with buy stops and protecting against downward movement with sell stop. This way, you can manage your risk and seize opportunities even when you are not actively watching the market. That's it for our deep dive into buy stop and sell stop orders. If you found this video useful, don't forget to give us a like and subscribe to our channel for more trading tips and insights. If you have not watched my previous video where I covered the buy limit and sell limit order, do check it out as well because it's equally important for you to understand too.